trading intra-week highs. Now, in this example, we can see price was trading above equal highs on Thursday of this particular week. Now, price rated the buy stop liquidity pool as a premium array. Now, when we use intra-week highs, and we are basically anticipating a market reversal after the buy stops are rated. When you see this happen in your charts, this is when you can step into the marketplace and be a seller intraday. You hear me talk about, and we've mentioned a lot about it in the early teachings of this mentorship and throughout my free tutorials too. When we look for equal highs, we know that that is like Candyland, as we call it. It's very easy to see that retail is going to have their buy stops resting just above that, and any rate above it, 10 or 20 pips above it, will scoop up those buy stops, and then many times banks will go in and sell right into that. And that'll give you your day trade as a short. Now, obviously, like we said with everything else, we're not looking just to sell right above an old high or even old equal highs, because sometimes old equal highs can be just targets for a longer term price move higher. But when the conditions are suggesting that we're in a neutral state, in other words, we're consolidating, or we're getting ready to turn the tide if we go up to a higher premium array, which would be existing just above the equal highs in this case here. If we see confluences of PD arrays to support the idea of selling above an intra-week high, then we can step in as a seller at London or New York. But also think in terms of what price may be unfolding in terms of overlapping these reversal concepts. See, we have a Tuesday high, and then Wednesday had a slightly lower high, but it's basically equal highs. We know there's going to be buy stops above that. So on Thursday, price rallies above it. At that time, it could also be seen as a New York reversal. So you're blending a couple different things. When you see an overlap of these types of reversal concepts, it makes it even stronger trading intra-week lows. Now, in this example, we see price was trading below the equal lows on Tuesday of this particular week, and price rated the sell stop liquidity pool as a discount array. Now, if you look, I've shown a low that was from the previous week as the double vertical lines. That's a Sunday. You have equal lows on the previous Friday and on Monday. So those two equal lows are traded down through on Tuesday, violating that old low. So you have an intra-week low that can be blended in with the previous week's range as well, especially if the reversal occurs on a Monday or Tuesday, as we see in this case here. Now, using intra-week low and anticipating a market reversal after the sell stops are rated, you can be a buyer on an intraday basis. Now, again, like we just said with the intra-week highs, we're not just simply looking to be a buyer below an old low or below equal lows. There has to be a context. The move that drops down onto Tuesday below those equal lows that's formed on Monday and Friday of this example in the chart, that's trading down into a higher time frame discount array. When you're staring at intraday charts and you don't have any reference point on the higher time frame, you're going to miss these beautiful scenarios where you can clearly see where the manipulation is going to take place and where they're going to run the sell stops. Now, obviously, like we said with the previous examples, we're not just simply buying below an old low. We're looking for confluences from the PD arrays to support the idea of buying below an intra-week low. And we simply don't go in buying below a low just simply because the price moves beyond the intra-week low.